Okay, good. All right. The trend. How do we identify the trend? We know there's two types of trends. There's the retail trader trend, what he wants you to see. There's the technical trend, what the rest of the world is looking at. The market makers perpetuate the technical trend and make you see it. They validate those signals on purpose. It's a dirty business, man, but that's what they do. The levels are visible on all time compressions, but I feel that they are visible on the 1 hour chart, highly visible. Some people like the 4 hour. Zaim happens to like the 1 hour. Carr likes the 1 hour. Some people can't decide, so they take the 15-minute and the 1 hour, cut it in half and use a 30. I don't care. I want you to do what works for you. The point is not to fill my ego. The point is for you to see it. So don't use what I use unless you really and genuinely see it. I'm not going to be offended, man. I want you to get it. Okay, keep this in mind. Hey, John, how you doing? The trend is set by the market maker and can be reversed at any time for no reason. The real reason for him to change the trend is because the dollars are getting out of whack and he needs to get them back. Understanding this, that it goes both ways, gives you a major edge. It allows you to stop thinking about the technicals and that, oh, in a downtrend, I'll only take rises and sell. It allows you to say, anytime it bottoms out, I'm not going to wait and buy. It allows you to take it down to the buy level and then back the other way. Don't get so caught up in your baggage or bias that you miss the good setups because you think it's supposed to go this way. Market maker hits the stops high, you're a seller. Market maker hits the stops low, you're a buyer. In line with peak formation, second day V, good stuff. Got it. Okay? If I'm going too fast, please let me know. This is important. This is how to establish the trend. Now, I like to think everything I say is important, but this is pretty important. Okay. The trend is generally set up as a 3-day cycle. Day 1, there can be multiple rises inside of day 1, but day 1 should be level 1 rise back into consolidation after the anchor point is formed. Okay? It's reversal day. Peak formation is formed high or low. Second leg W, second leg M is formed. What's kind of cool about knowing what you know now is that day 1 comes as a market surprise. What do you mean? It catches all retail traders off guard. And then it's aggressive. Look what happened Sunday, Monday. 3 hits to the top, the trend was up. Just kidding, dropped the bottom out of it. This catches everyone following traditional indicators and trend following strategies off guard, retail traders. The news is used to perpetuate false trends. Okay, my D fell off. Thank you, Gloria, for my English lesson. If you're at, you see the anchor point W, right? And then it rises up and pulls back, and the next night there's news. They'll make a V bottom right around 3:30, and if the news comes out at 4:15, whatever it is, they will spike in the correct direction to continue on with the market maker trend. So that's why I told you in the presentation the news is crap. If they happen to have trapped lower level shorts when the news is released, they will rise price. It doesn't matter what the news says. The news might say, oh, the pound's weak, and then the pound will still rise. That is simply because they have to complete their targets in their cycle irregardless of the news or regardless of the news. Okay? Yes, the news is BS, man. I said it and it's true. The news is pure crap. No, I'm not saying not to pay attention to the news. You need to be out or flat on the red releases. I'll talk about that, but for argument's sake right now, don't say, oh, the news said that there's less jobs in the U.S., so dollar-based pairs will drop. That's not true. What's going to happen is, depending on where market makers are in the cycle, they will behave based on that and nothing else. Okay? If they're at peak formation high, they'll hit the stops high one more time when the news is released and then drop. That's how they do it, and that's why they do it. No other reason except for the money. That's why the news doesn't match up with the way the currencies move. That's exactly why, because it doesn't matter. Okay, day 2. Okay, so you have day 1, peak formation is formed, comes as a market surprise, reverses, right? Day 2, the moving averages on the higher time frames will signal. The 5200 on the 1-hour chart might cross over. Traditional indicators will cross over and fire a signal. Zero line MACD will cross. CCI might cross. RSI might cross the midline. Retail traders wait for confirmation and validation to enter the market, right? I can't think of who it was, but someone had a system where MACD crosses the zero line on the pullback. It has to take out the next bar. And when it takes out the next bar, you enter the trade or some crap like that. That's called a validation of a signal. Retail traders wait for this. Waiting for this forces them to lose money. But here's what happens. If the traders aren't committing their funds, market makers aren't making any money. We all know they're in the business to make money. So by executing a move in such a way on day 2 that forces the moving average crossover, the indicators to cross the zero line, or certain indicators to cross the 50 line, it fires a signal. And to come back with a false move again towards the high or towards the low validates those signals. Understand? It's on purpose. That's why when you get a signal and it validates and you take it, it doesn't always work out. You were in the wrong segment of the market when the signal got validated. You were in stop hunt high, and you took it as an extension continuation because you had MACD confirmation. It broke the previous swing high. That's why that shit doesn't work. That's where the pin comes in on the second leg and snatches you away and grabs your orders. Exactly. Market makers force the hands of the retail traders to get them to commit their money because, after all, objective number 1 is to get you to click the mouse. If that money sits there on deposit and doesn't get into open float, it's of no use to them. Ah, sneaky. I brought that all the way back from day 1, slide 1. Understand? They know what they're doing, man. It's a big carnival. They validate the technicals on the chart. They show everybody the crossovers. They show everybody the zero line crosses. They validate the swing high with a spike, picks up the orders, right? Gets the breakout traders to fall, snags them. Bingo, got them. Okay. Day 3. Remember? 3 psychology. Traders are now convinced that this is the real move. Market makers show a thing called trend acceleration. That's when you get separation from the moving averages. The averages are fanned out. You get vector candles at level 3. The vector candles seem to be a monster amount of momentum entering into the market. Some people might even say, one of my pet peeves, risk appetite's in there. Hate that. Okay? You start getting vector candles on the last day of the cycle, and you also will see a 33 trade. Yes, Ziva, it does work. It does work, or trades won't be around, but those are 50, 60% systems. I mentioned earlier, the news is used to further the cause. Just when everybody sees it going a certain way and they get excited and want to take the trade, market makers hit the brakes and trap everyone except us the wrong way. Okay? All right, so now we have a 3-day cycle. Day 1, peak formation high, is usually the end of a trend cycle. Catches everybody off guard. Market makers trap the higher level longs, lower level shorts, and snatch the market away from them. They come back, form out the M or W, which is our anchor point to go the opposite way. That move validates all the retail stuff that's out there. The news could help to trigger that. Could time it right at 4 o'clock or right at 8:30 U.S. time to get the news release to coincide with it. Day 2, the new trend is underway. Market makers must force the hand of the retail traders to commit the funds the opposite way they were previously going. How do they do this? They perpetuate moving average crossovers, zero-line crosses, RSI 50-line crosses, CCI line crosses, whatever the indicator people are using. They force those to cross on the higher time frames. Most people trade multiple time frames. So the extended trend run forces all those charts to turn over. The 3rd day of the cycle, vector candles, acceleration towards the high. This also applies intraday, by the way. The vector candles, acceleration, pins turn to the top or bottom side. Pins turn to the opposite direction of where they're going to be going, or the current direction. If you start seeing pins issued to the top, pretty sure you're in level 3. Okay? If you see pins issued, pull back, again, pins issued, pull back, you're in level 3 of the cycle. Understand that. Market makers apply the brakes, trap everyone except us the wrong way. That's the 3-day cycle. Now this cycle in 3 moves also plays out intraday. Remember I showed you? Peak formation low, stop hunt, rise off of the low, hit the stops, rise. Hit the stops, rise. Hit the stops high. One direction, unidirectional stop hunt. Snatch the traders, pull away. Validate the pendings, one more pass, pick up the breakouts, grab the guys that were in the right direction by stopping them out or scratching them out at +1, and then on their merry way the opposite direction. Okay, I'm going to draw this stuff for you. Okay. The reversal in the market is used for market makers to book a profit. Okay, price is rising, rising, rising. Couple of days, everyone's long, everyone's long, everyone's long. They're buying from the traders, so they are net short. They got to get out of those positions or offload them to book a profit. The spike that you see before the reversal hits the stops of the people that are right, puts those contracts in their pocket, and induces people to take more longs. Those contracts will end up in their pocket as well. Think for a minute, man. Do you really think the broker's matching you up with some dude in China? And if you're in China, do you think he's matching you up with some dude in Italy? Do you really think that? Or is he, in fact, taking the other side of your trade and hoping that you haven't had this class? That seems more plausible to me. Okay, I'm going to break here. Is anybody writing the slide down? Please, I'll leave that slide up. I'll put the clock up. I'm actually starving today for some reason. I don't know what the hell happened because I ate. But it's 8 o'clock. Let's take our 30-minute break. I want you to think about what we've talked about so far, the trend cycle, stop hunts, all the things, and I'm going to start breaking things down for you. Okay? All right, I'll pull up my little, let's do 30 minutes. I don't think that's too long. I think it's good. We're going to go to about 11 o'clock tonight. Around 10:15, depending on where I'm done, Carr, one of our top students and traders, is going to hop in here and show you how you're supposed to be marking the charts and actually teach you how to do it. I got a lot of emails last night from people saying, man, I've never even tried to mark a chart before. I don't know what to do. So I guess it would make sense that before I give you the homework that he would show you, in fact, how to do it. The veterans that have been around, you can knock off tonight around 10:15. Okay, the new guys, I want you to submit your homework in this format and start to see what you're looking at on the charts properly so we all could be doing it the same way. So when you post in the forum, your charts will match other traders' charts that we're all working on together, okay? All right, let me get my little clock, take a break. Couple questions. Let's see. Dave asked me, is it okay to trade in the changeover shadow box? Absolutely, Dave. The changeover shadow box is where you expect the stop hunt to come in. Is it always going to line up right there? Absolutely not. But if the pattern, you trade the pattern. The boxes are a guide. If the boxes don't line up, don't not take the pattern because you think it's supposed to be in the box. Understand? Let me run this by you real quick. I usually say this every class, and I failed to say it this time, so let me say it now. For the first couple of 3 days, you're going to be confused. You're going to be asking me about the indicators. You're going to be asking me about the boxes, this stuff. I promise you that by the end of the third day, okay, so tomorrow night, third day of my teaching, not third day to class. By tomorrow night, things should start to come together. Okay, if they do not, then you need to send me an email and tell me what's wrong. Okay? Anybody having technical problems? I think Zen has a way for you to call in. He can help you load Java. I don't want you to miss out. The recordings are going to be hung in the forum for 2 weeks. So if you miss a night or you have issues, just get in there and write down the time you went down and then convert the recording over to the time you need to pick up, right? Like it's 8:30 now. If you went down from 8 to 8:30 during the lunch break, then you're good. If you went down from 7:30 to 8, that's the section you need to watch, okay? Just make a little note next to your computer and say, man, I didn't hear that part, I need to hear it again. That's the point of the recordings. You could start and stop them. Okay? Nice to see you, Alan. Back in here. Thanks for the no problems. Okay, so we left off on the chart about hoping he didn't take your class, okay? So seriously, if you're confused, just relax and listen and try to observe and pay attention. I promise you, I'm going to start hammering all these concepts together. What I'm doing is I'm throwing a bunch of concepts at you, and then I'm going to wrap them all up and bring them back together by the end of the sessions, okay? The idea is for you to realize that there's something else going on. These guys suck, and they're trying to take your money. And understand that you can beat them when you trade in line with them. That's what you need to understand right now. I'm going to repeat the concept enough times that it should stick in with you. It should stick to your brain. And if it doesn't, that's the point of the recordings, okay? I don't want to waste too much time on that. Continuation of the trend slides we were looking at. Not continuation of the trend, continuation of the trend slides. A trend reset will be used for market makers to book a profit but not reverse directions. Right? What happens? Give out their money, give out their money, give out their money, need some back. All right, but you know what? The target is that euro still must rise to a certain point. So they reset the trend by forming another anchor point, V or W, and then they break the previous high and continue on up for another 3 days or so. A reset will represent a new peak formation, high or low. Then you can expect 3 more days of rise or fall. However, very important, if no trader falls for it, the market maker may reverse the direction after only 1 more level or 2 more levels. That's why you have to understand his behavior in order to understand where you are in the cycle. Right? Things that I started talking about. Am I near the high of the cycle or the day, Steve? I don't know. Is he opening the spread? Are the pins switched to the top side of the candles? Have you seen vector and acceleration and speed around the price points you're at right now? Did it take 3 aggressive candles or 1 long spike candle to get there? These are the things you have to ask yourself. Is this the end of the ride? Is it 3:30 or 9:30? Is it 12 o'clock in the afternoon when they go into consolidation? That's how you tell where you are in the cycle, by the timings and the behaviors, not by the technicals that regular traders look at. Market makers validate that stuff to trick you. Like I tell people, oh, they go out for about 3 days or so and they got to get some of their money back. They go, Steve, euro's been going up since its inception when it was 99 cents to the dollar. I remember that. I remember people saying that the euro will never pass the dollar, that it's a natural stop-loss barrier. And guess what? those idiots didn't use a stop, and when it broke the dollar and never looked back, they're probably still holding open float from '01 or something. Understand, you have to start thinking from the back side of your screen. Start thinking like one of these guys. Start thinking, okay, what are the retail traders looking at? I see that consolidation accumulation phase right there. I know if I was on the other side of that, I'd be collecting up some contracts right now. What's my next move? I'm going to hit the stops one more time, snag everybody, and go the other way. That's how you have to start to think. When your mind opens up to that and start thinking like them, you will start to make money like they do. It's that simple. Okay. Once the peak is identified, the trend bias will be in line with the peak for 3 days minimum. Could it be 2.5 days? Yeah. If they come in at the London session for the peak formation, they can go London, US, London, change in US. Because the 3 levels were accomplished, but it was only 2.5 days. Very important. It is safe to trade V bottoms and V tops if you have clearly identified the cycle direction and the trap volume move. If you see the W anchor point to the low, and it goes up, goes into consolidation, the next day if they issue a V stop hunt like they did last night, it was actually a W, but it came right back out and repeated the level as a V right at the London Open. It's safe to trade that V because you knew it was part of a multi-session W, right? Here. Yeah, where did it go? All right, I don't know what happened to the folder. It got buried in this this stuff. I'll dig it up on the break and show you, okay? I'll draw it for you, actually, just right here on the chart. Let's do this. Okay, yesterday, we knew price was dropping. It made the spike, right? And then it went into consolidation overnight. Okay, when London came around, here's the London, Asian, right, market maker channel, Tokyo channel. When they made this out of the box and came back, this is technically a V bottom. But it's part of a larger structure that forms this W. So it's okay to take a V bottom when you, in fact, understand the directional bias by the market maker. Okay? Does that make sense? That's what I'm talking about. The big picture, the big thing. Don't get caught up, which most people do, and I understand that, but what I want you to do is get out of that idea, that concept. What most people do, I got to ditch the pen to get the slides back up. Okay. Is that you get jacked up in your little section of the chart, right? Okay, someone's saying the screen's black. I see my screen. Yeah, okay. Floyd, log in, log out, buddy. Okay, so here, look. Back to where I was, right? This is how it's usually going to play out. The W is going to form, and then it goes into consolidation. This is level 1, day 1. The next day, he might do this. That's okay to trade that. He's not always going to give you a perfect WWW every day. If he gives it to you, it's a bonus. Hey, Dave, I didn't see you, man. Nice to see you in here, buddy. If he gives it to you, it's a bonus. It makes it easier. Okay? That's what I'm talking about. I'm talking about that once the anchor point is set, then you, in fact, will understand the trend bias. Here we go. Anchor point, day 1, confirmed second leg reversal, right? The second leg, or the multi-session W, spread out, confirms that the trend reversal is on. Okay, what do you mean, Steve? If he comes back for a second swipe at those people, and it's spread out like over a day or 2 days, let's say he hits the low Sunday, and it comes back in here on Monday. If he spreads that out over 2 days, he ain't doing that because it feels good. He's doing that because there's a ton of cash down there. And the way to get it is to go down there and pick up those orders and like scrape money off the sidewalk. So what happens is you get day 1, level 1 rise, right? Goes into consolidation. You have your 1, 2. You might have your aggressive move away. You might have a 3-day rise within the day 1. All right, hold on. You're going to love this. All right, time to go. At the end of the day, he goes back into consolidation. to end the day. He starts the cycle over, right? He then will make a V bottom. I was expecting this. If he does this, more power to you. It's better. But he may not always do that. So it's safe to make the entry off the railroad tracks because you're going to have your vector. 1, 2, 3 right out of the box. You might get a pivot laying there, yesterday's tracer. Some things will be laying there, ADR low. Might be laying right there and give you an idea that, hey, the stop hunt should stall right here and the reversal's there. And then again, you have your 1, 2, 3. You may only get 2 levels in this example, right? If he comes out again and issues a V, I expect this. That's good. Now the expected move is this and reverse. Back into the range. What's the range? High minus the low divided by 2. It's going to be right about here. If it's a 300 pip move, you can expect about 150 pip retracement. Okay? The V could hit the mayonnaise. It could hit the watermark. Okay? That's the cycle. And it's the opposite cycle for the way down. Okay, now keep this drawing in mind. Okay? Now let's look at a chart. It's kind of funny. I drew it like that. All right? You have what we call a 33 trade on the last day. Okay? And I'm going to show you that. The 33 trade is a very aggressive day that guarantees a reversal of about 50 to 100 pips minimum. Here's why. Okay, isn't this pattern not only the intraday pattern, but it sets the beginning stage for the week? Right? Back into consolidation. Vector 1, 2, 3 to the low. Morning star formation around the mayonnaise can be construed as a V bottom or a W, depending on how you want to look at that. Right past the mayo. Why would he come down past the mayo and close aggressively past the mayo and then snatch it right back in one bar? Because it works. Hey, Wayne. It works because when they close below that, there's 2 candles below this, right? A retail trader would sell here and here. Some people say, oh, on a break plus a close below the mayonnaise, I take it. Some people say when I get a full bar below the mayonnaise, I take it. Isn't that funny how he did both? He issued a break plus a close and a full bar below the mayonnaise. Then he immediately stalled the brakes for 15 minutes, and then 15 minutes later, everybody is freaking stuck because 1 bar took it all back. Do you see that? Do you understand? It snatched it away from the traders. Okay? Our entry is in here after the morning star formation comes back to the mayonnaise, or a bar later in here. That's okay. And this trade moves nicely in, then it bounces, and it does what it's supposed to do to finish out the day. 1, 2, 3 to the high, end the day and chop, and then drift back into consolidation. Okay? Then what does he do? He does exactly like he's supposed to because we knew it was coming. Vector, tiny 1, 2, 3 to the low, 3 swipes to the low, issues a hammer, snatches it away, comes right back with a second leg, and then this is your 33 trade. Okay? I'm going to explain to you the 33 trade. The last day of the 3-day cycle will issue 3 intraday levels of rise. Okay, write it down. Or mark the tape. Whatever works for you. The last day of the 3-day cycle will have 3 days of intraday rise. 3 levels of intraday rise. I messed that tape up. Let me do it one more time. The last day of the 3-day cycle will have 3 levels of intraday rise. Okay? With little stutter consolidations. 1, aggressive off the low. 2, 3. Hit the stops. Notice the pins turned over. See the pins on the top side? It's day 3. It looks like stairs, right? Stairway to heaven. Man, it's like stairs. I see it, Steve. Do I know from the right part of the cycle? What time of day is it? How's his behaviors? Are you at level 3 rise on the last day? This is called a 33 trade. The reversal is imminent. You can sell on the hammer back into the range. First target's the water, second target's the mayonnaise. I promise you'll get it. Almost every time. Why? Think about all this money everywhere in here, right? Market makers had to buy off of all the traders. They had to buy off of all the traders, buy off all the traders, buy off all the traders, buy off all the traders, right? They're running out of cash. They're running out of money right now. It's getting a little low. The last day, the 33 trade, you ever heard of the term pump to dump? They're pumping the price on day 3 of the cycle to create, oh my gosh, look at this uptrend, I got to grab some of that. That mentality that is everywhere in the retail traders world. Man, look at that euro. I'm so sorry I missed that. Buying, buying, buying. They pump the price to buy from the traders, become net short heavy at level 3, day 3, and then correct the price and come out net positive in their cycle. Market makers buy from the traders or sell to the traders on an aggregate, with the last level of the cycle being the most aggressive and heavy buying or selling. That behavior allows them to come out of their longs or shorts in profit. Okay? So now, this is exactly what I just drew for you in my little sketch. It's going to be there over and over again. Can they reset back to the mayonnaise and continue up? Yes, because I don't know what the seasonal target is for euro, and nobody else does except them. I don't know what the quarterly high is going to be in GBP. But I can tell you that at those price points, when it approaches the yearly high or quarterly high, a sucker takes a break of that long. And I'm going to show you in a chart coming up exactly what I mean. Okay? All right, so we're still good. We're understanding the trend, right? Here we go. Next slide. Identifying where you are in the count will simply help you project the next move. You've got to identify the peak formation to know how the cycle's anchored and where you are in it. If a double peak formation appears on a higher time frame, all I could say is lights out. You will make some money. Okay? Here's what I mean. Okay, this is the pound that took 3 months to set up. Okay, think about how crazy that is. 3 weeks, 3 months, all the threes in there. Look at the daily chart where it formed a high. Let me pull my pen. Here's the daily chart where it hit the high for the first time. That was the seasonal high from September, October, November, right? It hit the high. It then had 3 levels of drop. And then it went back 3 levels of rise, and it came right back to the seasonal high. I promise you there's breakout traders that put their orders all up in here. They put big fat pendings. They were aware of this, and they went in there and they issued a big fat spike to the high and picked up those orders. Okay? They came near it again. Just so happened to be the Asian session where you're seeing this activity in here. Right here on the 15-minute. Have a looker. See it? Here's the 4-hour. November high holds. Market makers pinned it. They made the second leg of the M. There's the first pass on a 15-minute, second pass on a 15-minute, third pass on a 15-minute U.S. session. These guys are so freaking greedy because the bigger chart traders make up small institutions and hedge funds. They went back again because these guys were looking for the break. These guys were looking for the break on the daily above the high. Do you see how they went back 4 times, 3 times, once in London? Or twice in London, once in the U.S., and once in Asia. Think about how crazy that is. If they pass up there 3 or 4 times, I told you, if they make that many passes at a price point, it's lights out. They made the swipes at the high all those times because there's a ton of money sitting there. Do you see the 1 hour is crystal clear? Yes. Look in here at the 1 hour. There's the pin to the high. Come near it again, miss it. Come near it again, miss it. Boom, boom, boom. And there's actually a little tiny more pass right in there. Notice the outside structure. The outside bar forms the high of the cycle, but none of the bars penetrated. That is a sell all day and twice on Sunday if the market's open. Okay? So understand. Boom, 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 game over. If you have an M formation on a larger time compression, such as this one, that took 3 months to form or 2 months to form, the correction's imminent, man. They will correct the chart to get paid. Okay? For 3 months, can you imagine this, man? Somebody took that break long at the railroad tracks in October, November, right? November 4th, that week. They were all happy. They probably thought they got a great breakout trade above the seasonal high. They were probably ready going to buy their wife a new Lexus for Christmas. They were all excited. Market makers snatched it away for 3 months right through Christmas and didn't come back until February. Man, if they were running a hedge fund, they had open float for 3 months, had to pay swap every day. Do you know how crappy that is? I'm sure it ruined their Christmas. I'm sure they lost their bonus. Somebody was trapped long there. For them to come back to the level and pick up more orders 3 times? Yeah, somebody said she got a Hyundai instead of a Lexus. Coal in her stocking. Don't you see how dirty this is? That's why the regular technicals don't work. The breakout traders break above the seasonal high, break below the seasonal high. If they break above the seasonal high, you got to still get the right signals in the formation. Trading above and below the seasonal highs is a sucker's game. Don't do it. Instead, look for it to settle in and make the counter and take it back towards the seasonal number. Okay? Like we did in this example. This was good for 150 pips minimum at the seasonal high, okay?